July 2025 marks a seismic shift in U.S. trade policy. The Trump administration has imposed a sweeping 10% baseline tariff on nearly all imports, with a punishing 60% or higher tariff on Chinese goods. The goal? Protect American industries, revive domestic manufacturing, and counter what the administration calls decades of unfair trade practices, especially from China. This is more than a trade spat, it's a fundamental reordering of global commerce. International partners from the EU to Japan now face threats of tariffs up to 50%, scrambling to renegotiate terms and realign supply chains. The rollout is rapid. By July 4th, trading partners were notified, with new rates set to take effect August 1st. The intent is clear: force companies to rethink global supply chains and bring manufacturing back to U.S. soil. The shock waves are immediate, creating volatility and uncertainty across industries and markets. Every sector is watching, as the future of international trade hangs in the balance. For Tesla, America's EV icon, these tariffs are an existential threat. Tesla's affordable models rely on lithium iron phosphate batteries from China's CATL, making the company deeply dependent on its main geopolitical rival. A 60% tariff on Chinese imports would make these batteries prohibitively expensive, threatening Tesla's profit margins and forcing impossible choices: absorb losses or hike prices. There are no large-scale alternatives. U.S. or allied production simply isn't ready. If Chinese supply is choked off, Tesla can't pivot overnight, risking production slowdowns or even factory shutdowns. This exposes a paradox. America's green tech ambitions are built on Chinese manufacturing. Tesla warned the U.S. trade representative that such tariffs could cripple domestic EV production and cost American jobs. The company's stock has already plummeted, reflecting market anxiety. The very policies meant to protect American industry could end up crippling its most celebrated innovator. For consumers, the impact is immediate. EV prices will surge as battery and component costs rise. A 60% tariff could add thousands to the price of a new Tesla, pushing EVs back into luxury territory and reversing years of progress. Production slowdowns or shutdowns threaten jobs at Tesla's U.S. plants, with ripple effects across local economies. The just-in-time supply chain means a single disruption can halt entire operations. Local suppliers, logistics firms, and small businesses all feel the pain. Financial markets are rattled, with Tesla's stock drop signaling broader fears. The tariffs risk stalling both economic growth and America's clean energy transition. Tesla isn't alone. Every U.S. automaker faces the same threat. Ford, for example, has invested billions in EVs and partnered with China's CATL to build a Michigan battery plant. The new tariffs jeopardize these cross-border deals, making it costly to import essential components and technology. General Motors, Stellantis, and Rivian all depend on global supply chains, especially for critical minerals like lithium and graphite, most of which come from China. The U.S. is 100% reliant on Chinese graphite for EV batteries, a single point of failure. The tariffs treat the U.S. auto industry as self-contained, ignoring its deep global integration. By disrupting these links, the policy risks higher costs, production slowdowns, and lost competitiveness for all American automakers. Instead of strengthening U.S. manufacturing, the tariffs could trigger a widespread industry slowdown. The entire EV transition is now hostage to a trade war. The intended protection could backfire, harming the very industry it aims to save. The logical response is to onshore EV and battery production, a goal championed by both parties and central to the Inflation Reduction Act. But building a self-sufficient supply chain is a massive, years-long project. Experts agree, it's impossible to cut China out in the next 3-5 years. The U.S. lacks the mines, processing plants, and specialized factories needed for battery independence. Even new U.S. battery plants will rely on imported materials for years. Imposing tariffs now before alternatives exist risks dismantling the old supply chain before the new one is ready. The result? A dangerous vacuum that could stall the EV transition and leave automakers and consumers in limbo. The journey to supply chain independence is necessary, but sudden shocks could derail it before it begins. The Trump administration isn't the first to target China's EV dominance. Biden did too, but with a different approach. Biden's strategy combined targeted tariffs with massive federal investments and consumer incentives, aiming to gradually build a domestic supply chain. For example, Biden quadrupled tariffs on Chinese-made EVs and increased levies on specific battery parts, but gave U.S. companies time to adapt. The Trump approach is far blunter: a 60% tariff on all Chinese goods and a 10% universal tariff, with little distinction between finished products and essential components. This shock therapy risks crippling U.S. manufacturers who still depend on Chinese parts. Biden's plan accepted a period of codependence as a bridge to self-reliance. Trump's demands an immediate break, regardless of industry readiness. Both saw the same problem: over-reliance on China, but their solutions couldn't be more different. The stakes for American industry and workers are enormous. Trade policy debates often focus on big-picture economics, but the real impact is personal. For factory workers, the threat is job loss, canceled shifts, and economic uncertainty. Communities that banked on green manufacturing face declining local economies and dashed hopes. For consumers, higher EV prices put clean transportation out of reach, slowing the shift away from fossil fuels. The promise of well-paying high-tech jobs is at risk of turning into disillusionment. Slower EV adoption means setbacks for public health and climate goals. These tariffs reveal how interconnected the global economy is, and how policies meant to build walls can collapse the roof at home. Ultimately, it's American workers, families, and communities who pay the price for trade wars.